In October of 2023, we saw 10-year Treasury yields cross the 5% threshold for the first time in 16 years. Now, the Federal Reserve had stated that inflation is still too high. So are we seeing the same narrative in 2024? U.S. 10-year Treasury yields have spiked from 3.8% to a current level around 4.6% in the last 4 months. Now, the relentless momentum appears to be fueled by stronger than expected economic data and a resurgence of inflation. Recent Fed rhetoric seems firmly planted in the higher for longer camp, and that's pushed yields higher across the entire curve. However, in longer end rates, there appears to be an additional factor at work. Now, new government spending initiatives have surfaced with foreign aid packages and increased spending on green energy initiatives. Just this week, $95 billion was approved in foreign aid and $7 billion was approved for solar energy. The market's realization is that each new dollar of national debt equals an increased supply of long-end Treasury issuance. Now, the size of the new issuance has already resulted in some hiccups in bond auctions where the bid wasn't as aggressive as the Treasury had expected and hoped. Now, on April 25th, we see the anticipated GDP figures, which are expected to come in at 2.5%, and the core PCE number, the Fed's preferred measure of inflation, which is expected to be 3.4%. Now, if these numbers continue the pattern of surprising to the upside, it could add fuel to the higher rate narrative, particularly when the additional supply is considered. Now, if a trader believes that yields could continue higher from here, they could express that by buying the April 10-year Treasury yield futures contract at 4.59 and targeting a move to the psychological level of 5.00. A stop for this trade could be placed below at 4.35. Now, this trade can make $410 if the target is reached and risks $240 if you're stopped at your level. Now, if a trader believes that yields could fall from here, they could express that by selling the April 10-year Treasury yield futures contract at 4.59 and targeting a move back to the March lows of 4.09. A stop for this trade could be placed above at 4.89. This trade could make $500 if the target is reached and risks $300 if you're stopped out of your level.